Hi, I'm John Pasalis, housing analyst and founding broker at Realosophy Realty, where I lead our team of agents in providing data-driven real estate advice to home buyers and home sellers throughout Toronto and the Greater Toronto Area. We launched this Toronto Real Estate Summit because we're getting a lot of questions from consumers about the volatility in our economy and our housing market that was brought on by the COVID-19 pandemic. So we're going to be talking to leading economists, housing industry leaders, personal finance experts, and real estate agents to get a better understanding of what's going on in our markets today and what are some of the key things that we should be looking for in the months ahead so you can all make smarter real estate decisions. If you have more specific questions about your home buying and selling needs, please feel free to email me anytime at askjohn@movesmartly.com, and I hope you enjoy this interview.
Hi, I'm Ermi Desai, head of content at Realosophy and editor of movesmartly.com. Here with me now are a panel of top professionals who are helping homebuyers and sellers navigate the Toronto real estate market in a pandemic. Both of our brokers have well-established practices in the Toronto area. Davelle Morrison is a broker with Bosley Real Estate, and Justine Deluce is a broker with Chestnut Park Real Estate. David Larock is a mortgage broker and well-known blogger. And Bob Aaron is a real estate law expert and Toronto Star columnist. And both are frequent contributors to movesmartly.com. Together, they're going to help us understand what we need to know about home buying and selling when we're in the middle of a pandemic. Welcome, everyone.
Thank you.
Thank you.
Thank you.
So for the panel, if I could ask you to sum up the Toronto real estate market in one word right now, what would it be? Davelle?
In one word, I think I'd say frenetic. It's definitely quite busy right now. Everybody's trying to buy and sell. You know, I think a lot of people are concerned, will there be a second wave? Will we be in lockdown again? So I think that that's one of the reasons why there's just this urgency now to make shifts in their living accommodations.
Justine?
Yeah, if you want one word, I would say surprising. I think, do you want one word or do you want more than that? If you want more than that, I would say it's surprising because nobody expected it to recover so quickly. I think that, you know, when March came along, or in the middle of March came along, and we found ourselves at a dead halt as far as sales went, activity in the market, everyone anticipated sort of a 6 to 9 to 12 a month recovery. We really didn't know what was going to happen. And so what we've experienced is really more of a V-shaped recovery in many ways with respect to the average sale price being pretty much where we were when we left off at the beginning of March. And sales activity in terms of the number of sales reported for the month of June being very similar, almost the same actually, as they were a year out or a year ago. And great demand, lack of supply. So similar conditions to pre-COVID. So I would say surprising.
Yes. David?
I would say, like the weather outside, the market right now, in one word, is hot. Usually this time of year, the spring market dissipates a little bit. A lot of people go away to the cottage and things slow down before the fall surge. And right now, because the spring market was delayed, we've got hot weather outside and a hot market.
Bob?
I think the one word would be crazy. There are no rules anymore. The old rules are out the window. The new rules are changing from day to day. Market is hot in some places. I had a client yesterday tell me that he finally got a place in Cornwall because he had lost out on multiple offers before, and the market around Chatham it is busy. It's crazy. New rules every day. The mortgages, the people. Some condos are not selling. Some are. It's just it's nuts out there. I've lived through a number of recessions in the real estate market. This one is totally different.
So good we have you all with us today to help us understand it at least a little bit better. What is the mood generally, Davelle, amongst the clients you're working with? Are they anxious? Is there any difference in their moods?
They're not anxious, but they're committed. I find they're very serious to move forward. They know what they want. and they want to go out and get it, and they want to get it now. They don't want it to wait. It's not sort of a wait and see approach. It's more of a, I'm committed, I'm doing this, let's get it done. So that's the one thing that I'm really noticing. And like I said, part of it is sort of people are realizing they were locked away for 3 months, now they're out, and now they just want to get it done.
And Justine, can you take us through some of the aspects of home buying that have changed? Maybe, even from the basic things, but then also whether buyer preferences have changed in your opinion.
Sure. Well, to address the first part in terms of what has changed, I mean, the most obvious thing are just the safety protocols that we have in place, whether you're dealing with a seller or a buyer. So on the sale side, there are protocols that we have in place that relate to sanitizing a home before people go through it. Any third parties, if we're getting a property ready to list for sale, like a stager, minimizing the number of people through. So where you might have 4 people go in to set a place up for market, we now try and get that number down to maybe 1 or 2. It takes a little bit longer, but it's something that we've implemented on the list side. And then on the buy side, again, everybody's in masks. People aren't just looking at properties for the fun of it. There's a much more extensive pre-qualification process that takes place, again, in an effort to minimize the number of people going through a home unnecessarily. So those are the obvious things in terms of how things have changed. And what was the second part? I apologize of the question.
No, that's great, actually, both aspects. And Davelle, have you found that buyers are changing what they're looking for, maybe because of their experience with lockdown?
Yeah, I mean, I think people want to make sure that there's enough space for them to work from home. I mean, let's be honest, that's what everybody's been doing. So now they want to ensure that there's more space. I'm finding that the 1-bedroom condo, people who live in 1-bedroom condos now want a 2-bedroom condo, and the 2-bedroom condo people now want to move into a house. And I think some of the people who've been in their houses for a long time, they're looking at either buying or renting cottages. So I think that the pandemic has changed so many people's views of where they live, and now people are just itching to make a change now.
And Justine, what about sellers? Is there an anxiety there that they're not quite selling in a normal market?
Well, the numbers wouldn't indicate that. So from an achieving the best dollar, I would say no. And because there's still such a lack of supply, it's still a seller's market for sure. Where there is some hesitation on a seller's part and might be contributing to the lack of supply or the exasperation of what was already a problem, is just the safety stuff, right? So if you have a vulnerable seller, somebody who maybe has some health issues, they may not be willing to put their property on the market right now, only because they don't want people to come through it, even with strict protocols in place. But yeah, I would say that's generally what we're finding on the sale front.
So David, we've heard from Davelle that maybe some of us are rethinking the kind of properties we want to buy. So when we go to get that mortgage, has anything changed? We've heard anecdotally that lenders are asking more questions, specifically wondering what kinds of jobs borrowers might have and whether they are more at risk given the pandemic, the turn down caused by the pandemic. Is this something that's happening in your experience?
Well, lenders certainly have more questions since we've had 3 million job losses and another 3.5 million Canadians earning less than 50% of their income in March and April. Definitely there's more due diligence being done by lenders. If you're a salaried employee and you're working from home and there's been no change in your income, then it's a fairly short conversation. If you're a commissioned employee or if you're self-employed, the lenders will want to see a 2-year history of your income, but also they'll ask questions about what's happened to your income since COVID started. And they may want to see invoices or some evidence that your income has been largely sustained. Lenders want to do mortgages, so they're not looking for reasons to turn deals down, but they're definitely going to do more due diligence to ensure that they understand fully what impact COVID has had on an individual borrower's income.
So I know you always write about making sure you do your homework and getting those pre-approvals and those commitments in place, and this is even more so the case right now.
Yeah, there's no question. We've got almost a perfect storm for buyers because on the one hand, they're competing, which means a lot of times you have to go in with a clean offer. And we've got this uncertainty around employment, which creates more questions for lenders. So mortgage experts really have to do their work up front and ensure that if there are any questions about borrower income, that those questions have been answered, that you've had discussions with the lenders, and quite frankly, you've done more of your due diligence and more legwork up front. That's a challenge for a lot of brokers because you don't always have a firm commitment from clients at that early stage, but the smart ones realize that's a time to demonstrate your expertise and the value you bring to the job. And I have found people very appreciative of that. And if they do go in with clean offers, there are no surprises later.
So Davelle, it's surprising that we're already back into the clean offer territories. We are. So that means people don't have those conditions on financing and other things. In your experience, are you seeing anything happening right now? Are some deals coming apart that you wouldn't expect? Or are you seeing things that are in line with what you would normally see?
I would say that right now, definitely it's expected that people come in with clean offers. It's funny, I was on the phone with an agent this morning. They have a new listing that had just come out. It's a house, and the house is listed for $849. And actually what happened earlier this month is they took offers on the house, but they took a conditional offer on financing, and the financing fell through. So now it's being relisted, and so now they're trying to sell it again. So, you know, those things are coming up a little bit more often than they would have in the past. I think that's what stresses the importance on taking clean offers. You really don't want to have a conditional offer right now, because before you had a conditional offer and you pretty much thought, okay, it's going to go ahead. But now that's not so sure. So, you know, you really need to kind of dot your I's and cross your T's. I recently took multiple offers on a condo listing, and it sold for quite a bit above the asking price. So, you know, it's great, and it was a clean offer, but I went back to the client, to the buyer's agent, to say, are your clients going to be able to close if this property doesn't appraise? Do they actually have the money to close on this? Because it's great if you sell a property for a lot of money, but if you sell it for too much money and it doesn't appraise, that's a whole other risk level as well too. So you want to make sure that the people who are buying the property actually do have a significant down payment. And so if the bank says to them, we're only allowed to loan you X, that buyer can still come up to the amount of money that they offered, because the market right now is a little on the financing front.
Interesting. So those are some of the concerns we did see COVID in a hot market, where people are maybe paying that premium to get the house, but of course you need to make sure you can make that all happen on the financing side. Justine, are you seeing anything unusual that you think is more due to the COVID pandemic in terms of financing, or like Davelle, are you seeing a mix of things?
No, I would agree with Davelle absolutely on this. I think that it is a mix of things because certainly by the end of June, we were right back to a very, very frothy market that where you did find yourself below a certain price point in multiple offers. And so in order to compete, you were coming in clean. So, we didn't have to deal with that. But certainly back in April, I would say, even the beginning of May, I certainly had a deal fall apart on financing, and in that we wouldn't have expected it to fall apart pre-COVID. So, yeah, definitely, I agree with Davelle.
And David, have lenders changed how they're doing appraisals given some of these restrictions around stay at home and obviously minimizing traffic between places?
To some extent, lenders are willing to let appraisers take inside pictures from either the listing agent or from the homeowners in the cases of doing refinances. So they aren't typically going in and doing physical inspections of the inside of the property. And there again, lenders recognize that borrowers aren't always comfortable with people in their properties during COVID. That's really the only significant change. Thus far, I am seeing properties typically appraising. It's hard for an appraiser to argue that a property isn't worth what it sold for when it was listed in the open market. So there's always fears when the market gets hot that there will be widespread discrepancies between appraised values and purchase prices. But anecdotally on my end, thus far, haven't had one.
And let's talk a little bit about another surprising thing that happened, which is in the middle of all of this, the Canadian Housing and Mortgage Corporation, CMHC, again introduced more rule changes to mortgages. Can you walk us through what those changes were and what that impact was, or who it would impact?
Sure, but before I do, I want to make the most important point around the most recent changes. Up until this last round of changes, the mandate came from the Ministry of Finance, and the changes affected all three insurers, which, for those who don't know, includes CMHC, the Crown Corporation. Everybody calls it CMHC Insurance, but it's actually Mortgage Default Insurance. There are two others called Genworth and Canada Guarantee. And typically when there are changes made to mortgage insurance rules, they come from the Ministry of Finance and they affect all of the insurers. In this case, the changes were made by only CMHC. So the other two insurers made no changes. And given that most lenders deal with at least one or both of the private insurers, the impact in a real sense for borrowers is quite minimal. By way of a backstory, the CEO of CMHC, Evan Sedal, had been pushing for the Ministry of Finance to require that minimum down payments be raised from 5% to 10%. He went to testify. He argued that that was called for. He offered a very pessimistic forecast of what would happen with prices. He said basically they would fall by about 10 to 20%. That forecast doesn't look so good right now. And the Ministry of Finance basically said thank you and didn't follow through. He went back to CMHC. He's leaving at the end of the year. And I think he said, well, I'm going to do what is within my purview, and I'm going to announce these changes. And basically, he changed only CMHC's rules. So the impact industry-wide is incredibly minimal because most lenders deal with at least one of the two private insurers. So here are the changes that CMHC actually made, keeping in mind that any borrower affected by them, in the vast majority of cases, could simply seek, or the lender or broker, could seek the default insurance they need through either Canada Guarantee or Genworth. CMHC reduced the maximum income ratios that borrowers could use. I won't go into the specific detail, but long story short, the income ratios were cut back to the extent that they affected affordability by about 10%. CMHC also increased the minimum required beacon score from 600 to 680. And they also said that you can no longer borrow your down payment. They call it non-traditional sources. Down payment can no longer come from non-traditional sources, which are basically lines of credit and other types of ways of borrowing the down payment that don't involve using your own cash or investments. Interestingly, most lenders have minimum beacon scores higher than 600. Most lenders require that minimum down payments come from own resources. And again, the rule on the income ratios is minimal because the other default insurers did not follow his lead. So this got a lot of attention because previously, for example, when the stress test was announced, it really impacted the market. So people are used to the CMHC announcement of rule changes having a big impact and being a big deal. But in this case, as one mortgage broker put it, it was a big nothing burger. Basically, it got a lot of headlines, but in terms of the impact it actually had on the market, it was quite minimal.
And of course, we were all sitting at home hungry for headlines. I think everyone was reading more news than usual. So the beacon score, again, you're talking there about credit scores. So a little bit of tightening there. But as you mentioned, other lenders had already had higher standards anyway. Davelle and Justine, have you seen any impact in your experience from these rule changes? Any concern from buyers at all?
Well, I did have the case. There was someone that I was trying to help on June the 30th that for whatever reason could only go through the CMHC because they were getting finance with a particular lender. So I had the mortgage broker contact me and basically he needed to submit something before the deadline. So I do have one client who, she doesn't have that much money. And so she's just literally trying to find anything right now that she can afford. So she's all into the market in terms of, okay, is this going to be okay? Can I buy this? Is there going to be an offer date? Because of course, if there's going to be an offer date, it's going to go past what she can afford. So I just have one client that is very panicked about this deadline.
And Justine, anything from your side?
I don't think that it's accelerated any of my buyers' timelines in terms of getting into the market to date, but so I haven't had that experience yet.
So it's consistent with what David was saying.
Absolutely.
So back to the perennial question, David, rates, where are they? Where are they going?
Well, that is the $1,000,000 question. I'll preface my answer by saying what I say to every client, which is $2, in my opinion, will get you a hot cup of coffee. That said, I do spend a lot of time blogging about this and researching this. Right now, 5-year fixed rates can be had in the low 2% range, and 5-year variable rates can be had in the low 2%, high 1% range. They went up, they shot up after COVID. Lenders saw the job losses, needed time to assess the market. So those rates were up in the high 2% range at the peak of COVID fears. But there was a risk premium, which has slowly been taken out of the rates. There's an old saw that lenders take the elevator when they raise rates and they take the stairs when they lower. So they're taking the stairs now. Rates are dropping slowly but consistently. In terms of where they'll land, typically the fixed and variable rates are priced at about 1.25 to 1.5% over the rates they're priced off of, which for variable rates is the Bank of Canada's policy rate, and for 5-year fixed rates is the Government of Canada 5-year bond yield. Those base rates would suggest that 5-year fixed and variable rates should land in the mid to high 1% range when all is said and done. Of course, if you're locking in a 5-year fixed rate today, especially with a major bank with a huge penalty, then you can watch those rates fall and do nothing about it. But if your lender has fairer terms and conditions and won't hammer you on a penalty, or if you have a variable rate, which allows you to convert to a fixed rate at any time with no penalty, then you can take advantage of that if I'm right, and in a year or two, rates do end up falling into that range. So the key is know your terms and conditions. And if you're talking to a mortgage expert, they should be able to give you some strategies on how to position yourself now when you need the money so that you can stay flexible later if rates continue to fall.
And fixed and fixed versus variable, what are the key considerations right now?
Well, it's really specific to borrowers. I often say to borrowers that you need to ask yourself if you're more likely to lose sleep at night worrying that rates might go up or worrying that you're paying too much interest. The answer to that question will get you about halfway towards where you should land on the fixed versus variable spectrum. But right now, if you're comfortable with either option, variable rates save you money and they offer you a lot more flexibility. Again, we are in a time of turmoil when it comes to financial markets. And if I'm right and rates fall, variable rates offer more flexibility for 2 reasons. Number one, you can convert to a fixed rate at any time with no penalty with the same lender. And number 2, if you decide there's a better deal elsewhere and you want to leave that lender, the Bank Act of Canada will only let the lender charge you a penalty of 3 months interest. So you avoid that dreaded interest rate differential penalty that you can see on fixed rate mortgages, which I'm always blogging about. And for flexibility reasons, so number 1, the variable rate's cheaper today. Number 2, it gives you more flexibility. So again, every borrower is different, and you have to have a conversation with an expert to really figure out what's right for you. But all else being equal, I think variable rate right now probably favors fixed for most borrowers.
Great, thanks for that. Bob, something that is a little bit more unusual around this time around is the types of clauses people are seeing and the types of agreements that are coming attached with some of the real estate transactions. So on the issue of what people call the COVID confirmation forms, those are buyers needing to answer questions like, do you have a temperature? Have you had any flu symptoms? Questions that I think by now we're all very familiar with before they go to view a home. So is there anything a buyer or their agent should be considering when they sign these things or agree to these forms?
Well, of course, there's the privacy issue. But in light of the COVID pandemic, I don't see any problem with buyers having to say they don't have a temperature, they won't touch anything if they go inside, they'll just observe all of the niceties of the pandemic, including wearing masks and sometimes gloves. So I don't see anything wrong with requiring, on behalf of the seller, requiring buyers to sign the COVID agreement clauses. And I don't see anything wrong with a buyer agreeing to sign them. So if I was a buyer, I would happily sign them. And if I was a seller, I would happily insist on them.
So another type of clause, which you have been writing about a little bit more critically, has been the type of clauses that have been introduced by brokerages and agents into agreements of purchase and sale. Could you give us an example of what this kind of COVID clause says and why you are uncomfortable with them?
At the beginning of the pandemic, a couple of law firms came out and widely distributed some COVID clauses, which brokerages unthinkingly put into their agreements, and which OREA, the industry association, not the regulator, the industry association, adapted and put on its website for its agents to use. One of these clauses said there would be an extension of closing if the buyer's lender or the local land registry offices or the bank ceased operations. Another one said that if there was, if one of the parties was under quarantine, the deal would be postponed. There were clauses allowing a delay and even a cancellation if COVID interfered with the closing of the transaction. And these clauses, in 2 words, were dumb and just senseless. They just made no sense at all. They exposed the transactions to the risk of either party just willy-nilly saying, you know what, I don't want to close, or I can't get my money. The banks are not closing. The registry offices are not closing. The mortgage lenders are still in business. They may be a little slow, but they're still in business. And there was no reason for these clauses. And I fault the brokerages who adopted them with unthinkingly, without actually reading them to see what their implications were. And I fault OREA with seeming to endorse them. So, and they're still in use today. I saw one last week. And they allow people to get out of deals when that's exactly the opposite of the party's intention. So I have been, not only me, other lawyers as well, have been critical of these clauses, and lately their use has been dying off. So at the beginning, everybody was using them, and now they're kind of disappearing from the landscape, which is great, because people suddenly realized, hey, these clauses don't make sense. They allow people to get a deal, so let's stop using them, which is good.
So it seems like the broadness of it, the broadness of the clauses are obviously the biggest issue there. They're different from the kinds of clauses you would see normally. So is your opinion that even if there is a delay or some kind of slowdown from the bank or a lender, most parties would work together to try and manage that? We've seen that before in normal circumstances. Is that something that you would think would be sufficient, or what would you suggest to people?
Sellers want to sell, Ermi. Buyers want to buy. Lawyers want to get the deals closed. Agents want their money. Let's work together. And that's what's happening. People are working together. Okay, the keys aren't available, or the money comes in at 4:15 and it's too late. Everybody agrees. We'll do it the next day. No problem. But to have a clause which allows people to kill deals is just senseless.
And Davelle, is there anything from your perspective that might be happening out there to make agents and brokers extra cautious or want to put in these clauses?
And I think it's just really when the state of emergency first happened, I think everybody just went, whoa, what's going on, right? So I think that it was just, no one has ever walked down this path before. And so there was a lot of uncertainty, and really no one had ever had any experience with it. So everyone is really making decisions on the fly and trying to do the best that they can while making those decisions on the fly. And then as the weeks progressed, there were, issues with the land registry office be closed. Luckily OREA did some lobbying to make sure that real estate would be an essential service, so that at least we could sort of be rest assured that the land registry office would remain open, because all around us we were seeing, the landlord tenant board had been closed, evictions had been stopped. It's just, there's absolutely a ton of uncertainty.
At the beginning of the pandemic, the head of the land registration in Ontario very early on said, we are not closing. The land registry system, which is virtually all electronic anyway, is going to remain open. And that's exactly what happened.
But to Davelle's point, I guess there were, again, then you have the eviction board not being open. So maybe that was initially why there was some uncertainty. Justine, any experience yourself with using these clauses or seeing these clauses?
Right. If I could just add one more thing, I was going to say, the one thing that's really changed is, clients used to go to their lawyer's office before to get the keys. And now, because I see Bob smiling, and now because of COVID, they're all relying on the real estate agent's lockboxes to pick up keys that way so that they don't have to go to the lawyer's office. So I think that that's actually kind of a really interesting thing that's changed, that they're relying on the real estate agent lockboxes, which, sometimes where those lockboxes are can be a contentious issue for condo corporations. So I feel that now that lawyers are using lockboxes is actually their sort of legitimate way to transfer keys, I almost feel like the condo corporations are going to start to need to take a little bit more care as to where those lockboxes are and how secure they are.
That's a very good point. Justine?
Yeah, no, I think Davelle's right. And actually on the key front, I can tell you that a closing that I did in June, I actually had to deliver the keys, whereas under, normally to Davelle's point, like it would have gone through the lawyers. But in this case, just to make it happen, and because to minimize the passing around and the number of contacts to the keys, we left them on the kitchen counter kind of thing. But that was definitely something that changed. But in terms of the clauses that Bob's referencing, I think Davelle's right. In the beginning, there was a lot of fear. And certainly at Chestnut Park, we had in-house counsel looking at a variety of clauses that just covered any possibility, right? To protect a buyer and or a seller. And so once the fear dissipated and we realized that we could move and that we could transact and that we could function and conduct business safely with COVID, the need for these clauses, to Bob's point, became, there was no need to do them. And in fact, they could jeopardize a deal right before it closed, and nobody wants that. So I have not had to use them. I have not seen them in any of the offers that I have received on behalf of sellers. But certainly in the beginning, they were there, they were being drafted, and there was a lot of talk about how they might be used. But in a practical sense, they're unnecessary and actually not helpful.
So Bob, one issue that we have touched upon is the closing of the landlord-tenant board and evictions being on hold. Some sellers are finding that tenants are not vacating properties that have been sold. And is there anything that one can do to protect themselves against this?
Well, whether it's COVID or no COVID, there's always a problem when you've got a sitting tenant, and the offer often says, the vendor will give the tenant the required notice to vacate before closing, period, full stop. Well, that leaves open the problem of what happens if the tenant doesn't move out. We had that before COVID, and we have it now, except now the tenants are in the driver's seat. And if the tenant doesn't move out and says, I'm not paying and I'm not moving out, the sellers and the buyers too have a huge problem. And sometimes the tenants might theoretically ask for a big payout to move out. It's a huge problem, and it places the deals in jeopardy. So when a vendor signs an agreement, it's either we can't guarantee the tenant will be out, but we will do our best to give the proper notice. That's fine, but that kind of frustrates the buyer's expectations when the buyer has an unhappy and unpaying tenant, and the tenant won't move out, and they can't go to the board. And when the board does reopen, which hopefully will happen soon, they're going to have a 4 or 5 month delay in addition to the previous delay. So it could be 6 months before you get an order. The sheriffs are going to be backlogged like crazy. There's no rules anymore.
And I think it's a huge problem because, even pre-COVID, I had this situation last year with a client where I served the N12. We gave the tenants the requisite 60 days notice. They went to the landlord tenant board. They, basically wrangled an additional three months out of my client, and we had to push back the closing date. And there was a buyer who's waiting to move into their home that can't. And, that wasn't just my deal. I can see on a million different Facebook groups that a lot of the tenants have gotten wise to it. They go to the landlord tenant board and they squeeze out an extra month. And now that the landlord tenant board is closed, all you can do is try to reason with tenants and, quite frankly, write a check and give them money, because there's really nothing else that you can do. There's no governing body. At this point, I'm just saying to people, you're going to have to open up your wallet and write a big fat check, because that's the only way that you're going to be able to get those tenants to move after the property has been sold, which I think is a huge problem.
The good news is that most tenants are cooperative, and most tenants are continuing to pay during the pandemic.
Yes,
I don't want to dump on tenants, but most of them are good.
yeah.
Most of
I
them.
think yes, it's important. I think the issue is when it becomes your issue, it becomes obviously a huge mess, really, to deal with. If you are going to offer money, Bob, is there anything you should be doing? I mean, I hesitate to, I know you're no fan of more agreements that are probably not necessary.
If you're going to pay the tenant money, it may be good to pay it to the lawyer for one side or the other. And then the tenant can say, okay, when the tenant will get a letter from the lawyer saying, when I move out, the lawyer has guaranteed me a payment. On the way out, I'll stop at the lawyer's and get a check for X dollars. So the best way is to put it in the hands of a third party, neither the buyer nor the seller, but a third party who's regulated and guaranteed and insured, and everything will be handled through the lawyer. So the tenant has a guarantee that when the truck leaves, they'll get their money.
Bob, wouldn't you also suggest that the tenant should also sign an N11 after they agree to say that they're actually going to vacate the premises?
Absolutely, yes. Yes, but so they sign the N11 and then don't move out, then what?
Yeah, so at least it's a step, but again, there's a lot of uncertainty in that area. Justine, is there anything that you've experienced yourself?
I wouldn't have anything to add that hasn't been covered, so no.
Yeah, obviously a bit of a mess. Hopefully
Yeah.
there'll be some more direction soon. So the theme of our conference is Smart Caution. And I want to take us around the table and ask you what that means to you. So maybe we will start with you, Justine.
Smart caution. What does that mean to me as it relates to real estate today? Well, I mean, I think that, all of the same advice that I would give a client still applies in terms of whether you're a seller or whether you're a buyer, with the added, be extra diligence or due diligence because of COVID. So just making sure that, on the finance front, that you've had those conversations with people like with your mortgage broker, that you are fully pre-qualified, that you all of those regular things that you would do, you're still doing, but you're just taking extra caution. And on the sales side, the caution part is really just relates to the safety factor, right? And just doing all the things, making sure that you're working with somebody who's doing all the things that they need to do that take your safety into consideration and the safety of anyone coming through the house. So yeah, that's it in a nutshell.
Davelle?
Yeah, I mean, I would say that it's almost no different than any other time period, in that you want to make sure that you dot your I's and you cross your T's, right? You want to make sure that you've got your lending down pat, that everything is okay with the property. You've done a home inspection, or you've looked at the status certificate. All the regular things that you should be doing to buy smartly and cautiously, I think still come into play. It's just making sure that, there can be no room for error. That's really it.
David?
Well, I agree with what everyone else has said. You definitely want to do your homework up front, but I think as well, if we're talking about caution, I think people should be careful that they are confident confident that their income will be maintained, because we don't know the full impact of COVID yet. And maybe making a huge decision like buying a house is better put off until the path forward becomes clear. Again, it's easier for some than for others. But if there is uncertainty, I think discretion is, as always, the better part of valor.
And Bob.
Ermi, I think at your Reallosophy, you use the terms move smartly. And I like that, move smartly. And I also like to talk about a dream team. Don't wait till you go to your first open house to choose your dream team. In advance, choose your mortgage broker, choose your real estate agent, choose your home inspector, and of course, choose your lawyer. Get the dream team assembled and then plunge into the market, whether you're buying or selling. That to me is the essence of a smart buyer or seller. Get the dream team.
Great. And now we're asking all our guests this final question. Would you buy or sell a home right now? Davelle?
Absolutely, without a doubt. I mean, I think I'm also a real estate investor as well too. So for me, it's always a good time to buy. If there's a great opportunity, absolutely. Makes sense to me.
Justine?
Yeah, without hesitation, I would buy or sell right now.
David?
If I felt like now was the right time to buy because of my personal circumstances, I wouldn't let COVID put me off. But again, I would be careful, and I would only do it if I was confident.
And Bob?
The advice I would give to clients is, this is a market. If you're interested, if you want to buy, buy. If you want to sell, sell. But it also depends on your circumstances. There are people who, let's say seniors, who have been thinking of going into a condo. They may not want to buy or sell now because they like their backyards. They like the freedom that that COVID could take away from you. So depends on your circumstances, but I don't see any reason to have COVID interfere with your desire to buy or sell. Get out there, get in the market, do it now.
All right. So thank you to everyone. I think you've given us a very clear overview of the market right now in these unusual circumstances. And it's been super helpful. I've really enjoyed it. Thank you so much for joining us at the summit. And
Great. Thank you so much for having me.
Thanks for having us.
Thanks,
pleasure.
Ermi.
Pleasure.
Thank you very much. Bye, everyone.